Ladies and gentlemen, welcome back. And I want to talk about a new product that SoFi has recently released. Well, it's more of an expansion of an existing product, really. SoFi expanded their robo advisory platform. So instead of just having one portfolio that you could put your money in and, potentially do a risk assessment on, they'll actually have three separate portfolios. So this is their classic portfolio. Classic with alternatives, which can get you into things like venture capital or private credit or real estate funds, these sort of things. And then as well, they also have sustainability investing, which is more like environmental, social, governance type products that make it a little bit easier to stomach what you're investing in. Make sure that potentially they're not like you know trying out new lipsticks on penguins and stuff like this. Anyway, let's go ahead and take a look at the size of this overall market because I think that this is important as well. There were two separate reports that I've seen on robo advisory market research. And the first one that I saw from Allied Market Research was that it was going to be a $129.5 billion market by 2032 at a compounded annual growth rate of 32.5% from last year till 2032. The next one that I also saw was a report from Grandview Research that said it's probably going to be a 28.3% compounded annual growth rate all the way till 2030, which could also be very exciting. Place it somewhere within there, you'll probably find what you're looking for. Now, this was from SoFi's Q3 2024 earnings report, where they just recently talked about. Anthony Noto said the revenue per product that we're generating today was up meaningfully in this quarter. As we mentioned, it's nowhere near where it can be long term. As it relates to our invest business, which is where the robo advisory product actually lays right now, we're monetizing about half the rate that we think we could monetize it over time. In 2025, we'll take a number of steps where we start to monetize that better, of course, by adding incremental value to the invest experience. We go down, he says, we have award winning robo accounts and we continue to evolve those. And we'll see us do more in 2025 behind that to not only grow assets, but also to increase monetization. Well, as I showed you guys, there is clear, you know, changes and they want to add more value to the robo experience. However, what I learned is that SoFi's robo experience was actually not free previously. So if we take a look here, before it was free. And in fact, if we actually look in November, best robo advisors of November 2024, according to Forbes Advisor, you can see how one of the top robo advisors is actually SoFi, and they are placed there due to the extremely low fees. They actually say, hey, there are no large advisory fees. And one of the things that they say, SoFi is probably making their money because they're building the portfolio in higher cost SoFi ETFs. So that's how they're making their money. Where in fact now, because they're actually sort of getting in bed with Blackrock, which are going to help with some of the performance based of the robo advisory. So Blackrock is going to help model these portfolios and design them. However, SoFi even said that it's not completely on BlackRock. It's going to be our proprietary models, but we are going to take some advice from them as well while building, these portfolios. But anyway, now they're charging 25 basis points or just under a quarter percent, or well, I mean, it is a quarter percent on an annual advisory fee, which puts us right in line with the likes of Betterment or Wealthfront, but not quite as cheap as the likes of Vanguard Digital Advisor. Now, there's other benefits too, right? Account minimums, but the main draw in, I really do think, is that wherever your checking account is, wherever your credit card account is, it's all about the one-stop shop, right? If you fully bank with SoFi, you're doing direct deposit there. I don't think that you're going to go to Wealthfront or Betterment or even Vanguard just to lower those fees on robo advisory by 5 basis points, right? So putting us in line with most of the competition is where I think SoFi needs to be. And with the addition of things like alternative assets, that could be the sort of drawing point to some people if they also put that in the Forbes advisory for December, that this is, sort of an additional feature that you can find at SoFi that you can't find at these other solutions. Now, another thing I want to show off is sort of how these fees come into play. Okay. Matt Flo, who's actually on the board of advisory for SoFi, said that he's actually been fooling around with the robo advisory account for a little bit. Okay. It's just, sort of a test account that he has going on here. And he's actually up 39.42%. Now, according to Matt, he has not been continuously putting in new money into this account. He's just been letting it ride. And over a 1-year period, he's actually beating the S&P 500. And he is set to an aggressive portfolio, which is mainly equities and less bonds and these sort of things. But it is very good to know that the account is also performing very well also. Now, one thing I want to add, okay? The way that they sort of draw fees out is under the amount of the total assets under management, okay? According to an article that I recently read, they have about $1.3 billion in assets. We can see this here. I'll just bring this up. The San Francisco Digital Bank hit $1.3 billion in assets under management and will actually start increasing their fees. If you tack on this 0.25% advisory fee onto that $1.3 billion that they manage in robo-advisory, you're looking at $3.25 million of extra revenue per year, or about $812,000 per quarter. Now, that's just based on what they're managing currently. Hopefully that continues to increase. And the way that these sort of funds also work, right, is like if Matt's up 39.4% in the past year, SoFi's fees are going to go up essentially by 39.42% because it's under the total amount that they're managing. So as long as stock markets continue to do well, as long as people continue to DCA into these portfolios, the better it is going to be for SoFi. Now, $3 million a year is not super exciting. It is definitely incremental value, and they're monetizing a feature of their business that they previously were not, right? So potentially this also makes SoFi Invest also not be so much of a laggard whenever it comes to their contribution profit. But whenever you look in the grand scheme of things, SoFi just recently launched a loan platform business that brought in $60 million in the first quarter that whenever they launched, okay? At this current rate, SoFi would need to take 20 years at $1.3 billion in assets under management just to do what they just did in the first quarter. So this is a small part of SoFi's business, but potentially it could be an additional stream of revenue, and it definitely doesn't hurt. But let me know what you guys think. Would any of you guys dabble in any of these robo-advisory tools? Do you currently use them at SoFi? Let me know in the comments down below. But until next time, thank you all so much for watching, and bye for now.